JIN stock has been all over the place during the past 5 years, and it is right now trading at around 15 Australian dollars, which is right around a bit above the average of where it has been trading for the past year and a half. This is an Australian monopoly which has a huge moat and is expanding away from the local market. The revenues have grown around 14% year over year, the underlying EBITDA 7%, the free cash flow 24%, and it even declares dividends year after year very consistently. So let's look at Jumbo Interactive, the digital lottery company. Their mission is to become the #1 choice in digital lottery and services around the world. They basically have a proprietary lottery software platform, and they also conduct lottery management services and expertise to charities and different governments for the lottery sectors. So if you ever want to host a lottery, they provide you with the tools, services, and expertise that you will need in order to properly manage the lottery. So they have 3 main strategies for the future. The first one is to maximize the potential of their existing business and their proposition portfolio. So focusing on their services that they're offering right now, on the other geographies that they're focusing right now, whether it's in Australia or abroad. Secondly, they want to replicate their best practice operations from their lottery retailing segment into their other operating segments and build them for a global scale. They have 3 operating segments. We'll look at them in the following slide. And the third one is to diversify the portfolio and unlock an incremental total addressable market opportunities, which will create new revenue streams in a very organic growth. The main way they've been growing is, well, through attracting new clients to their services. But in order to expand into different geographies, they've actually been making quite different acquisitions, smaller acquisitions, but then they implement their technologies to those new companies, and they've been doing very well in the recent times. So these are their 3 main offerings. The first one being the lottery retailing, which basically consists of them being a reseller of the different digital lottery tickets, especially in Australia. Then they have their software as a service, which is a platform where they allow other clients, charities, governments to conduct lotteries and manage them online. And then they have the software plus services, which are managed services, and they allow them to establish and enhance their lottery programs. In terms of financial analysis, there are very few companies in the world that look better than this. They have an insane return on capital employed of 30%. And just for a bit of context, here we like to look at companies that have a return on capital employed higher than 12%, and every additional percentage point apart from that is a huge plus. So having a 30% is insane. Then they have a 61 times interest coverage ratio, which means that they basically have no liability risk. And then they have a great cash conversion of 120%, which signals that they are great at converting their net income into free cash flows. The profit margin is steadily sitting at 75%, and their operating margin at 40% is incredible as well. Here, their revenues and their earnings, we can see that they've been growing consistently year over year. Well, their revenues, their earnings have been pretty stable since 2019, and this has mainly been caused to their profit margins decreasing over time. This is the main issue that the company has right now. However, it's not bad because the company right now has profit margins that they used to have in 2018. The thing is that in 2019, they had a very, very good year and they set the bar really, really high. However, the revenues going up is what matters, since we believe that their earnings, they will be able to bring the profit margin back up. This company does not like to be leveraged, and although they are using some liability to leverage themselves and to expand and accelerate their growth, to make some acquisitions and everything, their debt to asset ratio has been staying pretty solid for the past 7 years. They have a pretty low liability base in comparison to their assets, which is something that we love to see. And in terms of their efficiency ratios, we spoke about them previously, but their return on equity is way, way above the industry, which is very good to see. And the return on capital employed is extremely good and has been stable for the past 3 years, as we can see on the graph to the right. When conducting the fundamental analysis, I gave this company a solid 8 out of 8, the perfect score. They have very low liability risk and they are a very safe investment. They have an extremely solid balance sheet, which is something that we love to see in companies. They're extremely consistent with their cash flows, which is incredible, since I like to invest in very predictable companies, very consistent and resilient companies. They do pay dividends, so that's a tick on that side, and they do a great job at growing their revenue organically. The other one is that they're of course growing their free cash flow organically. However, I think that this has become harder for them since their earnings have been stable over the past 4 years. So over time, we would like to actually see their margins stabilize so that their organic free cash flow growth can accelerate. But all that said, this company is great because it has an existing moat and a competitive advantage. Why? Well, because when a government, charity, or company has conducted a lottery before and has used Jumbo Interactive, chances are they will be a repeat customer in the future because they know what the standard is, and the services that Jumbo Interactive offers are very standardized, so you will always know what you're getting. Second of all, the experiences that these clients have been had so far are extremely positive, so that means that the customer base that they have right now is very, very happy and have a high tendency of repeating their use of Jumbo Interactive services. And this of course gives them a huge pricing power ability. The dividends they pay per share have been pretty consistent and pretty stable. However, they are not an aggressive grower of this dividend. They are at a dividend yield of 2.9%, and their payout ratio versus the free cash flow to the firm is 59%. I think this is a bit higher than the one I would be comfortable seeing, the payout ratio, but this company has so far been managing their activities pretty well, so I'm not mad at this. Their long-term analysis, I think this company has two main growth avenues. The first one is the expansion of the new services, creating new services, attracting or acquiring different companies, and offering their services to different customers. And the second one is to enhance their existing services. This can be done either through attracting new clients to their offerings or through geographical expansion, as they have been doing in the past 3-4 years. When using a discounted cash flow analysis, Simply Wall Street has found that the fair value for this company is closer to 20 Australian dollars. However, right now it's trading closer to 15 Australian dollars, which means that it is around 24.5% undervalued. And when looking at the free cash flow yield, it returns a 5.78%, which is a lot higher than the 3% long-term inflation rate, meaning that this company is as well as an attractive valuation. So when using these two models, we get the sense that this company is trading at a good value and that it could be at the price where you would want to actually purchase the stock. I don't think there are many risks for this company. First one may be the worsening competitive landscape, since they are already expanding geographically and their local market is more or less saturated, or they are already participating in the majority of the lotteries that are in Australia. This could be a bit tough when expanding. For example, they bought a company in the UK and they're expanding their services there. Well, they could be facing a lot more competition thanks to this. In terms of regulation, I don't see any regulations coming up against lotteries, as they have been around for the longest time and they're extremely popular in almost all economies out there. And the performance not meeting performance objectives, this is the main risk I put for them, mainly because of those margins. I would want them to stabilize, to see first of all improved earnings and improved free cash flow generation. And in terms of market, I don't think that lotteries are actually affected by economic downturns. I think that people actually buy more lottery when there's an economic downturn, so I wouldn't be worried about the market. Before moving on to the investment conclusion, please remember I'm not a financial advisor and this is not financial advice, so please do your own due diligence before purchasing the stock. All said, this company has a solid moat, it has consistent cash flows that is providing very resiliently and with a high degree of predictability, and has extremely high return on capital employed, which means that it creates value for the investor. So I believe that this is a good company, it is a great investment if margins stabilize. I'm actually going to put this company on my watch list and I'll be tracking it day after day. And if you want to see what stocks I buy, you can of course join the free Patreon and there's a link down below for that. So thank you for watching. As always, this has been the Cashflow Compounder, and there's a link in bio for a free stock if you join Trade Republic or Trading 212.